While headlines focus on political drama and the latest controversies in Washington, a seismic shift in global finance has quietly emerged from a recent U.S. debt ceiling bill, one that could have ripple effects far beyond Wall Street and Capitol Hill. Hidden deep in the dense, often overlooked language of the legislation is a section called Authorization for Alternative Settlement Assets. This provision grants the U.S. Treasury the unprecedented power to settle national debt with assets other than the U.S. dollar, a move that could fundamentally alter how America manages its obligations. For decades, U.S. debt was always paid in dollars, America's most powerful financial tool and the world's reserve currency. This clause changes that, opening the door to new forms of settlement and potentially transforming the global financial system as we know it. It's a subtle but profound shift, one that could redefine the rules of international finance. The language is intentionally vague, no specific asset is named, but that's exactly the point. The flexibility gives the Treasury room to adapt to a rapidly changing financial landscape, and perhaps even to experiment with new forms of value. Why now? The U.S. national debt is at historic highs, surpassing levels once thought unimaginable. Traditional solutions like printing more dollars risk runaway inflation and could destabilize the global economy. This move isn't an admission of defeat, it's a strategic pivot to future-proof the system, giving policymakers new tools to navigate uncertainty and volatility. By allowing alternative assets, the Treasury can manage debt more efficiently, reduce exposure to political gridlock, and potentially lower the risks associated with relying solely on the dollar. The implications are massive. The value of the dollar could shift, the future of digital finance could accelerate, and the very structure of international debt and global economic relationships could all be reshaped in ways we're only beginning to imagine. Most missed this story, buried beneath more sensational headlines, but it's a stay quiet revolution hiding in plain sight, one that could impact every nation and every investor. The real question is, what assets could possibly fill this new role? Gold, commodities, or something entirely digital? The answer points to a new era, one where digital assets, cryptocurrencies, and innovative financial instruments step onto the world stage as legitimate players in sovereign finance. This is the story behind the headlines, a transformation just beginning to unfold. Let's dig deeper and uncover what this could mean for the future of money. The Treasury's quiet evaluation of digital assets wasn't just about following trends, it was about finding a solution that could truly transform global finance. Out of all the options, one digital asset stood out from the rest: XRP. XRP wasn't chosen for hype but for its technical strengths, speed, low cost, and reliability. These features are essential for any system handling massive volumes of international payments. The XRP ledger settles transactions in just a few seconds, making it one of the fastest digital assets available today. And it does so at a fraction of a cent, keeping costs incredibly low for users and institutions alike. With a decade-long track record, XRP has proven its resilience and reliability through years of real-world use. Its decentralized nature means no single country or company controls it, ensuring fairness and transparency for all participants. This makes XRP a truly neutral bridge for global settlements, connecting financial institutions across borders without bias. Ripple, the company, is a major player in developing the ecosystem, but the XRP network itself remains open and public, accessible to anyone around the world. This neutrality is key for international trust, especially when settling sovereign debt between nations with competing interests. XRP's built-in features for cross-border payments allow for seamless, instant transfers between countries, and its deep liquidity pools make it uniquely suited for this critical role in the financial system. The Treasury can use one efficient network to settle with multiple countries regardless of their currency, streamlining the entire process. XRP isn't replacing the dollar or other national currencies, but complementing them as a high-speed rail for value transfer, making global commerce faster and more efficient. This is why XRP was chosen for the job, because it brings together speed, neutrality, and trust for the future of international finance. For government-level transactions, XRP's value isn't set by the open market. Instead, it's determined through a carefully designed process that prioritizes stability and predictability over speculation. This approach is crucial for large-scale financial operations between nations, where volatility can have far-reaching consequences. Rather than letting market forces dictate the price, a special formula is used to establish XRP's official value for settling government debts. This formula ensures the price remains stable, predictable, and completely immune to the wild swings often seen in the crypto markets. It's a system designed to foster trust and reliability at the highest levels of finance. The formula itself is comprehensive. It takes into account the total amount of debt to be settled, a designated portion of the overall XRP supply, and a range of economic indicators, such as global trade volumes, GDP figures, and even international financial stability metrics. This multi-layered approach ensures the price is both fair and sustainable. The outcome is a fixed, non-speculative price, used exclusively for transactions between the Treasury and creditor nations. This price is not available to the public and is shielded from market speculation, providing a secure foundation for international settlements. With this dual pricing system, public XRP markets continue to operate as usual, driven by supply and demand. Meanwhile, a separate, massive demand is created at the governmental level, operating independently from retail investors and traders. A significant portion of XRP is now earmarked and reserved specifically for these government transactions. This reduces the available public supply, creating a new kind of demand that is both strategic and long-term in nature. The stability of this system is non-negotiable. Nations require absolute certainty, not the unpredictability of speculation, to ensure smooth and reliable financial operations. This marks a fundamental shift in how digital assets are valued and utilized, signaling a new era in global finance, where trust, stability, and innovation go hand in hand. The plan only works if major US creditors agree, and Japan and China did. For Japan, already a leader in blockchain adoption, accepting XRP modernizes reserves and diversifies away from the dollar. China, seeking to reduce dollar dependence, saw XRP as a neutral, decentralized way to settle US debt outside US control. Both nations recognize the efficiency, speed, and resilience of a blockchain-based system. This isn't about abandoning the dollar, but building a parallel system for the future. Their agreement was pragmatic, a strategic move for their own interests and a step toward a more robust global financial system. The world's largest economies are now on board. This marks a turning point for digital assets. Cryptocurrencies like XRP are no longer just speculative bets, they're now tools of statecraft and financial infrastructure. The US Treasury isn't investing for profit, it's using XRP for stability and efficiency. This creates a new kind of demand, utility-based, not speculative. A portion of XRP's supply is now locked into a role supporting the world's largest economy. For the crypto community, this is validation, real-world, high-stakes utility. The future of digital assets will split one path for speculation, another for institutional adoption. The rules for each will be very different. The era of digital assets as core financial tools has arrived. The integration of XRP into US debt settlement is just the beginning. It sets a precedent. Digital assets can play a legitimate stabilizing role in global finance. For the US, it's a strategic hedge. For global markets, it's a new source of stability. The value of digital assets will increasingly reflect their real-world utility, not just speculation. Other nations will watch and may follow suit, accelerating the shift to digital settlement. For individuals, this changes the fundamentals. Utility demand is now a key factor. The line between traditional and digital finance is blurring fast. Stay informed. This is the new era of money, and the story is just beginning.